distinguished guests, mem- members of the faculty, and my dear friends. Welcome to the first day of Conventus 2020, the annual management conclave of International Management Institute, New Delhi. The COVID-19 pandemic has brought the world to a screeching halt. Institutions, corporations, and government alike are getting accustomed to this new normal. Conventus is a legacy that we at IMI New Delhi are determined to continue come what may. And in that very spirit, we are proud to announce that for the first time, Conventus 20 is being held online. My fellow compares Sarthak and I, Sushant, shall take you through the Finance Summit of Conventus 20. This year, Conventus is structured around the theme Survival and Growth in the VUCA World, Adaptability, Agility, and Sustainability.
The acronym VUCA, which stands for Volatility, Uncertainty, Complexity, and Ambiguity, has gained massive popularity in the business world over the past few years. The VUCA world demands leaders to come up with realistic and applicable solutions. Firstly, by tackling volatility with a visionary approach, and by not allowing small roadblocks to come in the way of the overarching vision. Further, businesses need to gauge uncertainty by bridging the gap between the causes and their effects. Firms can counter complexity by breaking down the loops of reactions and promoting proactivity towards solving problems. To conquer ambiguity, continuous learning and swiftness to adapt is key. For years, we have seen industries change entire business plans overnight to match the current market trends. The 2002 market crash had disastrous effects on various industries. Similarly, the 2008 financial crisis had disastrous socio-economic effects on the world. A common factor in both situations is how unprepared it left everyone.
As future leaders, understanding how to tackle these four elements will give us the opportunity to stay ahead of the curve. Survival in the VUCA world is need of the hour, and growth is the true way forward. Before we proceed further into the session, let us take a have a look at Conventus 20 video.
Business often takes inspiration from the art of war strategies. Gone are the days when a single textbook solution could work all molds. Challenges have become multifaceted. As experienced by the US Army during the Cold War, VUCA, an acronym describing how less they knew or could think regarding situations. COVID-19 pandemic has thrown the world into disarray. Everything has become increasingly unstable. The concept of clarity is muddled. Predicting the future is nearly impossible. Interconnectivity is more chaotic than ever. So, how do you plan on coping with the new normal?
To share with us their valuable insights, we are honored to have amongst us 6 senior executives: Dr. Rabi N. Mishra, Mr. Nitin Kotak, Mr. Vidu Shekhar, Dr. V. Chandramouli, Mr. Tamal Bandhopadhyay, and Ms. Richa Gupta. The panel will be driven by Dr. Sanjay Dhamija, Program Chair PGDM, IMI New Delhi.
We are delighted to introduce you all to our first panelist, Dr. Rabi N. Mishra, former Executive Director in charge of Supervision and Subtech at Reserve Bank of India. He worked with the central bank for more than 3.5 decades and had earlier held the position of Principal Chief Manager of Risk Monitoring Department of RBI and the head of the Reserve Bank Staff College, Training Institute of Senior Central Banking Professionals of RBI at Chennai. Sir, we are happy to have you with us today.
It gives me great honor to introduce our next panelist, Mr. Nitin Kotak. He is the co-founder, trustee, and treasurer of the Kolkata Foundation. A strategic financial and business consultant, he is the former chief financial officer and treasurer of Harvard Hughes Medical Institute, which is one of the largest non-profit in the world with an endowment of $20 billion dollars, and whose scientists have won 23 Nobel Prizes in past 21 years. Sir, it's a pleasure to have you here with us today.
Our next panelist for the session is Mr. Vidhu Shekhar, CFA CIPM. He is the country head of CFA Institute in India. Previously, he has worked with the National Stock Exchange of India, overseeing new product initiatives in debt and equity markets. He also contributed to the development of Indian financial markets through his participation in the work of various committees, like the Raghuram Rajan Committee on Financial Sector Reforms and the Primary Market Advisory Committee at SEBI. Sir, we feel privileged to have you with us today.
Our next panelist for the session is Dr. V. Chandramouli Swaran, Senior Director, Global Financial Crimes and Customer Protection, and Chennai Center Head, PayPal. Over the last 10 years, he has led the modernization and transformation in several areas, including data analytics, product, and technology. He focuses to keep PayPal compliant with ever-changing compliance regulation, driving transformation in risk and compliance space. Sir, we are delighted to have you here with us.
Our next panelist for the session is Mr. Tamal Bandyopadhyay. He is the consulting editor, Business Standard, and senior advisor, Jana Small Finance Bank. He also writes in the weekly column, Bankers Trust in Business Standard, which is widely read for its insights into finance. Prior to this, he was advisor for Bandhan Bank Limited, the first microfinance bank of India. Sir, it's a pleasure to have you with us today.
Our next panelist for the session is Ms. Richa Gupta. She is the Senior Director at Deloitte in India. She has assisted several M&E clients on a range of transfer pricing analysis. She has also contributed to articles, thought papers, and books on transfer pricing in India. She contributes regularly via media interactions on changes in monetary policy, fiscal policy decisions, and other economic developments. Ma'am, we are honored to have you here with us today.
Our moderator for the session is Dr. Sanjay Dhamija, Program Chair, PGDM, IMI New Delhi. Dr. Dhamija is currently working as a Professor of Finance and Accounting at International Management Institute, New Delhi. He has attended management programs at Harvard Business School, Wharton Business School, and the University of Maryland. He has experience of over 35 years in the industry and academia, having worked earlier with MDI, ABN AMRO, HSBC, Escorts Finance, DCM Shriram, and MMTC of India Limited. Sir, we are happy to have you with us today.
Before handing over the discussion to panelists, we would like to give you all a brief introduction to this year's Finance Summit, the theme of which is financial resilience in times of continuous disruption. The COVID-19 pandemic has catalyzed financial uncertainty unprecedentedly since the Great Depression. Despite the narrative being peddled through, statistics have revealed a negative 23.9% GDP, which is a grim tale of how consumers are struggling to manage money and debt, investments, afford credits, plan for retirements, and build saving. There has been an estimated loss of 121 million jobs between the economic slowdown and the pandemic.
Amid such transitioning times, the prime issue is to deal with and endure these disruptive changes. There is a shock to the cost of production, consumer demand, and equity risk premium in every sector. This unprecedented situation demands expertise in financial resilience, especially to maintain commercial and operational excellence. Therefore, businesses must be proactive in assessing their risk and vulnerability.
Financial resilience allows businesses to plan for such downturns and execute those plans pragmatically and sensitively, taking into account all the probable outcomes. This supply chain breakdown has reduced business operations, and economics history tells us that more businesses fail to emerge from a downturn than while going into it or experiencing it. While it seems that wheel is coming off, those who survive need to seek the opportunities that emerge amid the chaos.
I would now like to request our moderator, Professor Sanjay Dhamija, to embark on the intellectual ride with the upcoming discussion. Over to you, sir.
Thank you very much, Team Finalize, for having us here this morning and really putting together a very, very diverse and learned panel. But I must say to start with that giving only 60-65 minutes for this panel is really unfair. Uh, Within the time constraint, I'm sure we are going to have a very, very engaging conversation. As you rightly pointed out, that we are living in a era of continuous disruption, and the expression VUCA, which originated in the U.S. Army, that has become an integral part of vocabulary for the business world as well. Particularly in last two decades, where we have seen large-scale disruptions caused by Enron, and then followed by the dot-com bubble and the global financial crisis, and now the COVID. So in this kind of environment, financial resilience has become one of the key virtue for survival and growth. Uh, Financial resilience may mean different things to different people depending upon the context in which that expression is used. So before we actually start the discussion, let me start the ball rolling by asking each of the panelists as to how do they describe financial resilience. So what does it mean, and how do we achieve financial resilience? So let me start. I would request each of the panelists to be very brief on this particular, just maybe one or two sentences as to their first thought, what financial resilience actually mean. So can I request, can I start with Dr. Mishra, please? You have to unmute yourself, Mr. Mishra.
Yes. Thank you, Professor. So for me, I have coined a definition, keeping in eye the financial sector and the work we have done during last 1 year. Because now exactly it is fitting. We started that kind of work well before the pandemic, but when the pandemic came, we could realize it was a godsend. I define it like this: financial resilience is a self-acquired immunity to remain financially safe and strong and continue to remain so. And added with this is, it also reflects being crisis resistant, so much so that on the extreme eventuality, you can get back on feet as quickly as.
Okay, thanks. Mr. Kotak?
At the outset, I would like to thank the IMI, the Conventus 2020 student body led by Srikunj, and my co-panelists for this opportunity. To me, resilience has to do with your emotional strength. It is a mindset of something you want to achieve and how much you are able to overcome obstacles to get it. And for an organization, the mindset is its culture. So from my perspective, financial resilience is the elasticity in an organization culture to wither any major event that negatively impacts its ability to earn its income or it impacts the value of its assets. And the only other point I want to add is that financial resilience is important to all entities, whether they be for-profit corporates, not-for-profit entities, or even for individuals.
Mr. Vidhu?
Thank you, Dr. Dhameja. I would say that the impact of any crisis is the function of two variables. One is the size of the shock, and second is the vulnerability to the shock. Okay, so with the same shock, different firms, different individuals will respond differently based on their vulnerability. And that vulnerability is a product of various things that I'm sure that we will discuss in this panel. So that's what I would like to add to what the other said.
Mr. Mawli?
Yeah, thank you for having me. I think I'm just going to put what Mr. Kotak said into an example. For us, being in the payment space, we've actually become like an essential service for us. And that adaptation was part of the resilience that we had to demonstrate, being there for our customers, coming up with products that our customers will actually use in these times was an example of the resilience that we had to show to be financially relevant. We've definitely become a darling in the stock market space, outperforming many of the bellwether companies. A simple example that I'll share with you is in India, we are very, very used to QR codes. But, even though the US, for example, is a developed country, they're not used to QR codes. So having a QR code solution turned around in like a couple of months was an example for resilience, not only for us from benefiting it from a financial perspective, more importantly for us being or offering solutions that our customers need today is an example of how we've thought about resilience.
Thank you. Ms. Gupta?
Yes, thank you. At the outset, I would also like to thank IMI for inviting me to be a part of this panel. I think today financial resilience for me would mean to plan and harness resources for the long road to recovery that lies ahead for most of us, for most countries and businesses. So in a way, it is to plan for what we need today and what we need to keep for tomorrow as and when the economy starts coming back to the recovery path. In terms of the choices facing the country, it can be seen as a choice between how deep the stimulus has to be today and how much we need to keep for tomorrow when the world is back to the competitiveness that we had seen in the pre-COVID time. So that is how I think I would define financial resilience.
And do we have Mr. Bandyopadhyay? Is he there? Chair? Has he joined in?
Yes, sir, he has joined.
Mr. Bandyopadhyay, are you listening to me?
So I think there's some issue on his end. I'll just coordinate once in.
Okay, not a problem. I think we'll wait for him to join in at the later stage, and in the meantime, we can start with our discussion. And if I use the language of what we are seeing today, the COVID. So what I'm hearing from the panelists is that financial resilience is like immunity. So like we as individual, we have the immunity to face any kind of a virus or any kind of disease. So likewise, as organization and as economy and as individual, we also need to have that financial resilience as a immunity. And how do we boost that immunity? How do we create that financial resilience so that we can face any onslaught of the challenge? And if we are infected, how do we recover quickly from that infection? So thank you very much for a very nice definition of what financial resilience is. So let's start the discussion, and we are going to go from macro to micro. So let's look at the macro picture. So I'm coming to Dr. Mishra. You have been in the financial sector and also as a regulator, banking regulator for more than three and a half decades. How do you see the state of global economy today in general and financial sector in particular? Because in any such disruption, financial sector is one of the most severely affected segment. So how do you see the global economy and the financial sector in view of the large-scale disruption caused by COVID?
Okay, thank you. So I have, for constraints of time, so I have chosen 3 themes with few sub-themes in between, so that I will quickly tell them, because I have kept in mind the students who should get some information which will be they will be receiving for the first time. So that being the approach, so first theme is economy is getting crippled day by day over the cusp of uncertainty. So 3 reflections on this. The COVID-19 pandemic repeated history after a century. It also combines a simultaneous supply and demand shock. It is all pervading, national, regional, global, projected to last long, clouded with a high degree of uncertainty. As per IMF calculations, this year, 170 countries will see income per capita to go down. Only months ago, same IMF, while trying to project the same thing, so they had told 160 economies to register positive per capita income. You see how things changed over a few months. So that is the extent of uncertainty. Such has been the unexpectedness. The World Uncertainty Index shows that the level of uncertainty associated with COVID-19 exceeds that of any other crisis experienced since 1960. And another interesting thing on these early warning signal and stress tests. As we all know, central banks all over the world, of course, India, we have not yet done it in public. So they announce a stress test results every year on especially systemically important banks. But this year, the advanced economies have been so hit hardly, badly. For the UK, it is the worst recession since 1976. In the USA, 36 million Americans have claimed unemployment compensation. Emerging and developing economies around the world have shrunk by 20 to 40%. In sync with that, the early warning signals and stress tests to gauge financial resilience have been rendered ineffective. So much so that the European Banking Authority has suspended stress testing of banks across the European Union. The Bank of England too has exempted big lending institutions from this year's stress tests. Future capital planning has become so difficult. And why they have done, as we know, a quick line here, negative growth rates to the extent of 5 to 6% is a 6 sigma event. Probability of happening 1 in a million case. So naturally, our existing stress test models are not able to accommodate them. So that is the extent. And second theme is, it is much worse than 2008 and 9 global financial crisis. So 2-3 interesting facts I will flag here. GDP growth projected for 20 is 3 times worse than the corresponding decline in 2009. And what was projected in 2008 for 2009 was much better then. Whereas in 2009, 3 large regions, East Asia, Pacific, South Asia and Sub-Saharan Africa experienced little change or even an increase in GDP growth. All regions around the world will experience a contraction in economic growth in 2020. So this is second point. Regarding recovery, after the global financial crisis ended, a large increase in global and regional GDP growth occurred right away in 2010, with only advanced countries experiencing a sluggish bounce back. In contrast, the recovery of 2021 is projected to be much less strong, with most regions and countries regaining only a fraction of what had been lost during 2020. Next fact, financial crisis 2008-9 came amidst an environment of financial stability. As Minsk says, stability breeds instability. This created a hemorrhage of confidence on financial sector performance. So prolonged, this impression remained that despite a much safer financial world today, people still tend to smell the possibility of another run on the financial sector. Likewise, businesses will not be able to forget it so easily, so fast. We'll make future decisions with the risk of another pandemic in mind. Looking at the impact of this pandemic, the impressions generated are that the risks were greater than were thought to be. This newfound knowledge, it may linger more, will have long-lived effects on for future economic choices for long times to come. 2008-9 crisis erupted from the financial sector, spread to macroeconomic sector, creating a vicious cycle to accentuate the crisis back in the financial sector. The root cause analysis then warranted an overhaul of structural defects in financial systems, institutions, market and infrastructure. This pandemic also will force us to ponder over what we should get into. But this crisis is essentially a health-related crisis, leading to economic crisis, which will lead to financial sector crisis. Little difference here. Till the time a lasting solution to this health issue is found, which is not so forthcoming anyways, revival of the economy will remain uncertain. And most importantly, another observation I find, because my book is about 2008-9 financial crisis, I find a huge difference this time. That time, it was immediately followed up with an international coordination of central banks. You would have heard, I will not elaborate here. Not visible this time at all. as was visible that time. The globalization trend hence, which was issue raised by Danny Roderick and all. This globalization trend is fast changing, so is corroborated by this fact that we are taking a turn towards re-globalization. I will end here, but one more, I think I have time for one more thing, an important thing for financial.
Maybe in the next round, Dr. Mishra.
Okay.
Yeah, thank you very much. Since we have Mr. Bandyopadhyay also joining in, so let me go over to him and ask him about what is his take on financial resilience in the current situation, and where do he see the global economy and Indian economy going forward. Mr. Bandyopadhyay, please.
Can you hear me?
Yeah. Yes, sir. We can see you and hear you.
Welcome back, Tamal Dada.
Please unmute Mr. Bandyopadhyay.
Yes.
Yeah.
Okay. Can you hear me now?
Absolutely clear.
Very clear.
Okay, fine. No, thank you. Yeah, I just to be getting out of all the semantics, I think what RBI governor has been repeatedly talking about, what you are calling resilience, is talking about financial sector stability. And unfortunately, even before COVID came, Indian financial sector was not exactly stable. In the sense, from 2018, we have seen a series of disasters, if I may say so, in different parts of Indian financial sector, whether it's bank, non-banks, cooperative banks, and never ever we have seen banking regulator coming out, issuing release, even on a Sunday, saying that your money is safe, financial sector is safe. In fact, in the recent history, I could only remember once post-Lehman crisis, there was a release by Reserve Bank of India about one particular new private bank, a large bank, which had some very small, minuscule exposure to Lehman Brothers. But there was sort of panic, and RBI had to tell the market, look, we are behind this bank and this bank is safe. But over the past 2 years, repeatedly, we have seen Reserve Bank of India telling us, your money is safe, banking system is safe. So that tells the story how resilient or non so resilient our banking system. And COVID has added a different dimension. And at this point of time, when everybody talks about immunity, you and me, you will see on newspapers and television channels, all the advertisements of various kind of Ayurvedic, etc., which will give us immunity, adrak and honey and all. Unfortunately, for banking sector, no adrak and honey will work. They need solid capital. That's all. If you want this banking sector to be made resilient, then nothing else, cut all the fab, they need to have capital, which unfortunately our public sector banking industry, which is about 70% odd assets or maybe slightly less, they don't have enough. You have noticed that past few months, in every opportunity, the new private banks have seized that opportunity with both hands. I will not name them. All of them have gone to market and raised money. And they are, I'm not getting into all the technicalities because you heard Mr. Mishra, who is an authority on all this. I don't want to get into technicalities. But they are adequately capitalized. Our public sector's banks do not have enough capital. So where would them, even if there is risk averseness, and even if they need to lend, because lending is very critical to bring back economy. And this is a chicken and egg theory. I mean, Reserve Bank of India says that banks are risk averse, they are not lending, and because they are not lending, things are not picking up. Banks are saying there is no demand. So how do you put demand back in the economy? You are talking about where is our economy heading towards? Is that the demand has to come and then the banks have to get in. And the demand can come in. I think the government needs to play a critical role. Some kind of the government has been doing, but not enough. On the fiscal side, we need certain kind of stimulation to demand to come. And at the second stage, where as and when the demand comes, will the bank be able to meet the demand? No. A large part of our banking system will not be able to do that because they lack capital. They have enough liquidity, but your students, they're all finance students, they know that liquidity is not the only tool to give money. I mean, you can have plenty of liquidity in your deposit base, but still you can't give money. You can't build your asset book, loan book, unless you have capital. So to cut a long story short, I don't want to take so much of time. Indian financial sector was not exactly in the best of health leading to the pandemic. NPA played a role. Havoc NPA, Reserve Bank of India did AQR in 2016, Asset Quality Review, that exposed the soft underbelly of Indian banking. They had to expose their balance sheet, the weaknesses. They needed tons of money for provisioning. And in the process, they are just about coming out of that, and the COVID has hit. And in between, we saw the problems in banking, in non-banking, in other areas and all. And Reserve Bank of India, even SEBI, there was a joint statement on a Sunday saying that everything is fine. So we got into COVID, unlike many other countries, with a not so strong financial system. For the record, among the G20 nations, after Russian Federation, Indian banking system had the maximum bad assets, 2018-19. And then COVID came. All of us thought that, the phase of recognition of bad assets is over, and now it's a resolution is coming. But the resolution is now delayed. It's been put on hold. IBC is no more working. That's a separate story. And nobody knows where the economy is heading towards. First quarter, after the first quarter numbers came up, everybody and his uncle and aunt, they are revising downward. You look at Moody's, you look at S&P, you look at ADB, everybody is talking about wild numbers, 10, 12, 15, 16, 18%. The most conservative number of Indian economic contraction for the fiscal year is around 7.5%. RBI is keeping quiet. RBI is neither giving any projection on inflation or GDP growth, because they're saying it's uncertain time. We are still gathering data. I don't know why Reserve Bank of India does not say so. Even in the normal time also, RBI does not necessarily get everything correct. But I think RBI does not want to add to the uncertainties. But we hope that on 1st October, when RBI MPC meets and the policy comes, this time we'll get the economic data, what is RBI's views of the contraction. So definitely economy will contract. To what extent is anybody's guess. My guess is single digit, not in double digit. And because it will be contraction and the base effect next year, we will bounce back definitely, but not V-shaped. It's a U-shaped. In the meanwhile, we need, I think, some kind of stimulation or stimulant, from fiscal stimulant from the government side to spur the demand. And when the demand comes, banks should be ready to give money because they have tons of money. But the second part comes that banks need their capital. So cut a long story short, resilience and all, whatever you call it, is actually stability. And if you want stability, you need to infuse capital to the banks, and well-capitalized bank only can meet the credit demand as and when that comes. So it's a little complicated, what comes first kind of theory. But at this point of time, as we speak, uncertainty continues because we do not have any clear picture what is RBI's view on the contraction of GDP, and to what extent government will be liberal in infusing some kind of fiscal stimulus. Here I end.
Thank you, Mr. Bandyopadhyay. And how quickly the narrative have changed. A few months back, we were discussing how to become a 5 trillion economy by 2024. And now we are looking at 24% negative GDP growth and how to get out of the current situation. That is how the theme has changed in a matter of a few months. So let me come to Ms. Gupta, another economist on the panel, for her views on the Indian economy. I would like to see something positive. What are the key factors, according to you, Ms. Gupta, that will drive growth in the Indian economy in the current scenario? And how can the economy be made more resilient to these kind of disruptions, which are here to stay? So can I request Ms. Richa Gupta to give her views?
Right. Thank you, sir. So, a lot of it has been already explained by the earlier panelists. What I would just like to add here is we must remember that even before the COVID came, the Indian economy was underperforming to a certain extent. So while domestic consumption was on the expected path, but exports and private investment were not coming back or were not seeing any revival during those quarters. And it was the government spend which was sort of driving domestic consumption as well. Now what has happened is, because of the economic lockdown, loss of income, even domestic consumption has vanished. So the problem is that in order to revive demand, we have to spend, like Mr. Bandyopadhyay said, we have to have a stimulus to come where the consumer confidence can come back to spend on discretionary and non-essential items, because Indian economy has always been led by domestic demand. So that has always been our mainstay. But at the same time, even during the pre-COVID times, the government was doing the heavy lifting in the economy, and we do have constraints, resource constraints as an economy. There are a lot of demands. I mean, the need of the hour today for the government is to spend on health infrastructure. That's their first priority today. So to be able to sort of manage within the resource constraints, I think one thing that could be done, and which the government is also saying, is to look at the quality of their spending. So if the government were to spend on building infrastructure, that will also generate employment and income, and also create sustainable assets for the future. Because what we are seeing is, the pandemic is impacting different countries differently. So some economies will start on the recovery journey faster than the other economies. By the time we move to the path where we have been able to control the pandemic and we don't need to worry about mini lockdowns or regional lockdowns, some of the economies would have already started recovering, and we need to conserve our resources. We don't want to be in a high debt trap situation at that point of time, where then we find it difficult to raise resources and finance the growth that is going to come then. So the quality of the spending or the quality of the stimulus that the government gives is very important. And one way to harness it could be to infrastructure spending, and not just physical infrastructure spending, but also towards building social capital. So a lot of biologists have said that we are this is not the first or the last pandemic. We should be prepared for having such situations in future. So building a social capital, building a health infrastructure, a primary health infrastructure, all of that will also go towards reviving the consumer sentiments. I think the focus is not just on stimulus, but on the quality of the stimulus that comes and the direction of the stimulus. Mr. Thameja.
Yeah, thank you, Ms. Gupta. So all is not lost. I think the role of the fiscal and the monetary policy and the stimulus by the government, not only the quantity, but also the quality of the stimulus. I think that's a key for reviving the domestic consumption and demand. So after having had a look at the macro picture, which is not looking very promising, how are the corporates reacting to that? So what is happening on the ground at the micro level? Now, let me come to Vidhu. Mr. Vidhu, you interact with a number of corporates. You do look at their balance sheets. What are the corporate balance sheets telling you? How are the corporate board and the management handling the current scenario? What kind of issues they are focusing on to improve resilience to face this situation? So if you can highlight some of the things which you have observed, Vidhu?
Sure, thanks, Dr. Thameja. So, just like you said, we looked at the economy level, and then the way to understand these issues is to look at the industry sector level, as well as the company level, and then the individual level. So we find that the board involvement has gone up very significantly. So what we generally see is that when it's business as usual, the company is operating in normal times, the board is involved, and the board pays attention to strategy and shareholder interests and so on. But the moment a crisis like this happens, everything is changing, and so it becomes very important for both the executive management as well as the board to understand and respond. And in India we have this saying, vinashakale viparita buddhi. So we don't want to fall into that trap that you are faced with a difficult situation and then you make it worse by the decisions that you take. So the issues of how boards work closely with what kind of role they are playing, what is the dynamics, culture, etc., they become very important. Now, the first step in understanding any of this is to see what is the immediate response. So, like people said, you have a demand side problem as well as a supply side problem. Your operating cash flow is disappearing because you are not able to service your customers, you're not able to service your customers because they are not buying, and also because even if they want to buy, your supply chains have got disrupted, and so you're not able to supply to them. So the first step, both for management as well as board, is to deal with the immediate issues and to interpret it for themselves. And I believe that companies in India have done a good job, because often crisis really sharpens the mind, focuses the mind, and gets people to work together. And things which are people tend to just set aside their differences and get together and find solutions. And we find that across a broad range of companies, people have really responded to the immediate issues. But then once you have done that, and this includes health and safety, it includes supply chain disruptions, it includes cybersecurity issues, all sorts of things. Okay, so number of new things which come on the table for the both board as well as the management. Once you've done that, then you start assessing what does it really mean in terms of how different is the environment now, and how does this company have to change. So, for instance, you start seeing changes in operating model, role eliminations, departments being closed down, restructuring happening, difficult decisions being taken, right? So all kinds of things happen in companies when you are in a sort of repair mode, and you are positioning yourself to manage in a situation which is likely to remain difficult for the next many quarters, right? And it's only after that, after you have responded to the immediate crisis, after you've gotten your act together in terms of how the company needs to change in substantive ways to live in this new environment in terms of operating model and things like that, that you start thinking about long-term strategy. Because COVID has changed the world in so many different ways that it has also presented new opportunities. Like Chandrabauli, I think he mentioned in his opening remarks that this is where you see that new types of customers have cropped up, and you have a competitive advantage. Any disruption presents you with opportunities to move ahead. And what we believe is, what we see is happening in many sectors is that the winners are being separated from the losers. Even before the crisis, since the beginning of ILFS, we have seen that there has been a flight to quality, and the access to markets in terms of both debt and equity capital has have the haves and the have-nots, and that is being that's being more intensified with COVID, and we can get into that a little bit more later on in this panel. But what is happening is that within the industries, we are seeing winners and losers. And if you talk to the M&A bankers, they're saying that deal flow is increasing. We will see much more. We'll see some people collapsing and some people left standing, and we'll have good assets that will change hands. And at the end of the day, when we get more visibility and when everything clears up, you will find a very different competitive structure in many of the industry sectors. So as I represent the investment profession, and investment managers are looking at all these things carefully to see how each of these sectors are going to shape up to COVID. So I will stop here. Maybe we can come back to these issues.
Thank you.
Give you examples, but I think I've exceeded my 5 minutes.
Thank you. Thank you very much. Thank you. Thanks for this positive note, Vidhu. And yes, every crisis leads to some winners and some losers. So it's not only the crisis, it's also how we respond to that crisis that determine the outcome of the given situation. And one of the segment or one of the industry that have really is one of the winners in this current situation, I would say, is the digital payment industry. And I think the biggest boost to the digital payment that we have seen is because of the COVID. So I would request Molly to give his inputs about how the digital payment industry has received a boost because of this pandemic, and what are some of the emerging opportunities and the challenges as well because of the quick transition from a paper-based payments to a large-scale digital payments that we are witnessing. So Molly, please.
Thank you, sir. So I'm just going to take off from what Mr. Vidhu is saying. I think teed off really nicely. I think absolutely right. I mean, what has happened is that digital payments has become an essential service. Rather than being a nice to have, it's become an essential service. And so we are seeing a secular trend. And I'll give you an example, right? Just, in the last few months, we've seen 20 million new customers that have come on board. And that kind of volume we've never seen in the past, right? What usually takes 3-4 months to get, we basically see in a month. That kind of volumes are coming. So a lot of new people are coming in. And so we are thinking of this not as a crisis, but more as an opportunity to disrupt the market, right? So digital transformation itself is now suddenly like what used to happen like 3 years, 5 years, 10 years, suddenly has to happen in like 3 months, right? And so that's the kind of impact that we're seeing, number one. From a customer experience perspective, what has happened is that people have been sheltered, so they have to now get things done from their homes. So obviously people are moving online, right? And so very interestingly, what we've seen is what we are calling it as a silver tech generation come onto the payment space. Now, what do I mean by silver tech? I mean like people like me, who have silver hair, suddenly come into the payment space because they don't have a choice. They have to adapt to this, medium of transaction. That's the second interesting trend that, we've seen. The third one that I'll tell you is very interesting is that, people expect experiences to be similar no matter whether they are transacting online in front of their laptop or they're actually in a shop. That kind of, consolidation is something that we're seeing. And that's where something like a QR code actually comes and, makes it, right? So I'm still using my app, but I'm just now, like in front of like a terminal that accepts a QR code. That kind of a, trend is something that we are seeing, right? Given that we operate in more than 200 markets, we have been able to sit back and witness different trends. One of the common questions that come up is that, hey, is this kind of migration to digital payments sustainable? That's a question that we often get asked, right? And so we've actually seen it sustain. If you look at some of the markets that opened up first, like, India, gone through the unlock phases today, sometimes you wonder, hey, are we in a, pandemic or not? Sometimes you wonder when you go out, right? But Germany is a great example of a country that came out of the pandemic. In fact, we've seen sustained volumes in terms of digital transactions continue even after people came out of the pandemic, right? So we expect this to be a secular, sustained trend. A couple of other pieces that I will highlight, right? We are all worried about, Professor, when we connected earlier, one of the questions you brought up was, hey, what is happening with the MSME space, right? We're definitely all worried. Now, what we've played a role is, something that, Mr. Tamal touched on earlier as well. The thing is that, as a company, we need to partner with the government to facilitate what the government wants to do. So we've partnered in terms of distributing loans. We've ourselves distributed a lot of loans. So like Mr. Tamal was saying, cash in hand helps actually businesses, overcome, these kind of scenarios. So we've played a role there as well. Equally importantly, one of the things that I wanted to touch, right, is that while we speak about people who are suffering, there are entrepreneurs who are actually succeeding in this, in these times. And these are entrepreneurs who have actually embraced digital transformation. That has actually played a significant role. So digital becomes, super important for you. Some of the other trends that we are, seeing, right? We are seeing strength in fashion, home and garden. A lot of people are cooking at home. A lot of people are doing gardening at home. A lot of people in front of computers doing a lot of gaming, right? So we're seeing a lot of, those kind of, trends as well. Now, the importance of a digital economy cannot be stressed. We want everybody to survive and thrive in this economy. So digitalization actually makes things more inclusive. And so as an organization, as a country, we need to, embrace digital. Yes, we are doing a lot of, work in the digital space in India, right? PM Disha, digital literacy, a lot of stuff is happening. But, making entrepreneurs as well embrace, digital and go digital. You can still be, offline, but at the idea is that you need to make sure that you are there where your customers want. That is something as a trend that we need to move towards.
Thank you, Molly. So it had been a blessing in disguise. I think the quickest move from paper-based to digital payment has happened because of the crisis that we have faced.
Absolutely.
Another, so we have looked at how the corporates, the large corporates are reacting to the crisis. But there is also a very important segment, which is a non-profit sector. And I'm coming to Nitin for that. Nitin, you have significant experience in the non-profit sector, both in the US and in India. Can you share your thoughts about how the non-profits have been affected because of the COVID, and how can they really build financial resilience while facing this onslaught of the disruption? Nitin?
Sure. Thank you, Professor. I'm glad you've included this nonprofit sector in this discussion. I think it is very important for the budding professionals of today not to overlook the CSR activities, especially since corporate social responsibility now is a legal mandate since 2014. About how it has impacted the nonprofit sector, one point to note is that even before the disruption caused by COVID-19 and the recent natural calamities, philanthropy and the nonprofit sector in India has been much, much below the world levels. For comparison, in 2019, the total charitable contributions in the United States was a staggering $428 billion or 38 lakh crore rupees, which amounts to about 8,800 crore rupees a day. Against that, the total private funding for nonprofits in India, including the spent and unspent CSR funds, was 56,000 crores, which is also an optimistic estimate by Bain and Company and Dasra, which is less than 2%. So what you see is that, what the people in the United States donated in 1 week, Indian corporates and individuals donated in a whole year. This was the situation even before the pandemic started. And to add to this existing, relatively low level, the recent disruptions, which initially did see an increase, in the beginning, as COVID happened, as the pandemics happened, people were sort of encouraged to donate, and there was encouragement, and people did come about and donate. But very soon, there became donor fatigue, and now people are a little hesitant because possibly because their own financial resiliency, whether it's individuals or corporates, is low or has been severely impacted. In addition to this, foreign contributions, which were a reasonable source of funding for nonprofits, they declined by about 40% because over the last 3 years, the government has canceled almost 13,000 NGOs licenses under the Foreign Contribution Regulation Act. So their ability to accept foreign contributions came down. So all in all, an existing sector which was already low in terms of world levels and already deprived of finances was suddenly badly hit. With respect to the second part of your question, which you asked, which is how can they increase their resiliency? There are a lot of points, and let me just touch a few in light of our time constraints and maybe not delve in too many of them. First, I think the most important thing is the size. The nonprofit sector in India, as I said, is hugely fragmented. So if you look at the amount of funds available to nonprofits in the US, those are available to 15 lakh nonprofits who are registered nonprofits. And India has 2% of that funding, as compared to that twice the amount of nonprofits. According to CBI, they did a study in 2015. India has about 31 lakh nonprofit organizations. So you see, the US has large nonprofit organizations, and therefore they are able to impact much better to the economy. Even, just to give the example, the organization which I used to work for, Howard Hughes Medical Institute, it had a balance sheet size of $20 billion and an annual budget of $1 billion, larger than many, many corporates in India. So those are the types of nonprofits that are there. So one important thing is size, and maybe one solution here might be that a couple of several large corporates in India could sort of pool in their CSR funds to maybe create large entities to focus on selected crucial areas of social development and national building. The second area which nonprofits need to pay attention to be able to build in their resiliency is corporate governance and transparency. Currently, there is a lot of mistrust on nonprofit organizations. One of the reasons of that being, once money is donated and once money goes into these organizations, it seems to vanish like into a black hole. So we need to create a pool of trustees who are passionate for public good, who can guide these nonprofits towards corporate governance like large corporates do, and towards transparency. The third requirement is, I think we need to have a well-paid professional management in these nonprofits. Our sector is currently managed by passionate individuals, but without much professional background. Probably they don't have much other to do, but they are passionate about their cause. We need to create the nonprofit sector as a viable and attractive career opportunity for professionals, so that you will have professional people there. The other thing that nonprofits do is they need to measure key metrics, including impact. Right now, there is inadequate tracking, accounting, or even data analytics. So the impact that organizations are making and the cost of that impact, the cost per beneficiary, is not tracked. I think that is another area which they can do that to improve resilience. The other thing which I think Molly mentioned in his area is, we also, I think nonprofits need to increase collaboration with the local bodies and the government authorities, because that can potentially multiply the impact of every philanthropic rupee that we send. And the other thing that they need to do, again, to talk about donor apathy, there is a lot of donor apathy. So we need sustained donor reporting and detailed donor reporting. But I think most importantly, the sense of philanthropy has to increase in India. I mean, if you look at it, India is just 2%. And even if you give credence to the difference in the economy size, US may be 10 times that, but we are like 1/50th of the world economy. So the sense of philanthropy has to increase in India for the Indian philanthropies to become reasonable. There are, of course, many other areas which need to be looked at for resiliency, but again, in lieu of the time, I will stop here, and maybe we can come back to more of this later.
Yeah, thank you, Nitin. I think you highlighted the importance of size, transparency, and corporate governance for improving resilience in the nonprofit segment. But I believe the same factors are equally important for the large corporates as well, how transparent and how well governed they are.
Absolutely.
We have, say, about 15 more minutes before we hand over for Q&A session. So I think we can go for another round of questions, but with even more restricted time, maybe 2 to 3 minutes to each of the panelists. And I would like to start with Mr. Bandyopadhyay again. I think one of the hardest hit, one of the segment which is hit the hardest is the SMEs, MSMEs. Now,
yes,
whenever any such crisis happen, the large corporates still have the resources to manage that. But when it comes to SMEs and the small entrepreneurs, they are not able to really cope up with these kind of disruptions. So how do we improve the resiliency of this particular segment, which otherwise is the backbone of Indian economy? Mr. Bandyopadhyay, please.
Sir, yeah, quickly because of the paucity of time,
Yeah.
because you can have one discussion only on this.
Absolutely,
so before the government actually redefined the criteria what makes an MSME and SME, there are about 63 million odd MSMEs were there, out of which small medium was about 5,000, and rest of them were mostly small, etc. Now their contribution to GDP is 31%, and they are the second largest employer after agriculture. So just to what you said is exactly you have hit the nail on the head. They are the very critical for the Indian economy. Now what we have done, they are in a deep trouble, and the government, what it has done, it has sort of created a window of 3 lakh rupees of money, 4-year loan with a 1-year moratorium. And who are the guys who can take that loan? Anybody who has about 100 crore kind of thing, outstanding, they can get, 100 crore kind of business size and 25 crore outstanding, they can get 20%, meaning about 5 crore money upfront, no question asked from the banks. That's the kind of situation. Now, I've seen a rating agency which talks about how many of them actually credit worthy or not. I'm not getting into all the nitty-gritty part and all. The problem with this segment is this: many of them actually have eaten up their capital. They need capital, they don't need debt, because in the past few months, just to keep the factory going and giving everybody has not thrown their people out, so keeping their salary, etc. So many of them have dipped into their capital. They need capital much more than the debt. If you want to bring them back, they need capital. And I understand that government has created another 50,000 crore capital kind of stuff, where 90% will it's a part of the Atmanirbhar Bharat. 3 trillion is the debt and 20,000 crore is the capital. It's a kind of sub debt. They are not calling it capital. It's a long-term capital. Okay. Where 90% is given by the government. Now, how much it can get here under this scheme, MSME promoters can get equal to 50% stake of their company, or maximum 75 lakh. And there is a it's a 10-year loan. I think 7 years is the moratorium, and within for the 7 years you don't need to pay on interest. You don't need to pay on the principal, but within 10 years you need to pay that. But is 20,000 crore enough? I don't think so. For the record, out of this 3 trillion till August end, it has improved further. In the finance minister meeting, the banker said 1.5 trillion, more than half of it has already been sanctioned, and 1.11 trillion already been given them. Okay. But my understanding is, A, they need capital. This 20,000 crore subdebt is not enough. And B, the problem is the MSMEs, apart from the capital, they're receivables. So they are the part of the supply chain. And on the other hand, there are large corporates, there are mid corporates, and there is even government. And these MSMEs do not have the financial resilience or strength at this point of time to wait for 90 days or 60 days or even 30 days to get their receivables. So these are the two key things we need to address: capital and faster getting the receivable.
Thank you, sir.
If we want to bring them back to health. Thank you, sir.
Thank you, Mr. Thank you. Dr. Mishra, your take on the economy and the banking sector going forward. Very quick, 2 to 3 minutes, sir. You need to unmute yourself, Dr. Mishra.
Recovery, V or U or shallow U or L or W. My take is KSF. So two V's sitting over each other. Some sectors will quickly and rapidly rise, while some will get dimmed and dying. So now, quickly telling what you will, these sunrise sectors will improve, like digitalized things, like Mr. Mowli told. But some sectors will require huge transformation, requiring reskilling of people, which only markets cannot do. So we have to do this. and then on redesigning architecture of running a financial institution. This whole paradigm of risk management will need an overhaul. Anyway, it would have been a nice debate when Kamal Dada told the banks, NBFCs, UCBs all over in doldrum. I don't agree with that. As on March 20, things were very, very good. But that is another way to... what will happen in March 21 is different. But March 21, things are very good, especially NBFC sector and UCB, I don't agree with him. Anyway, so how do we create transformational change in management of very risk management function in the banks? The CRO job will not only to look at risk, his now immediate role will be to redefine each risk in line with the institution, and also include in his menu of things what should be the business model henceforward, the capital planning required. Because with this, my next point is each financial institution should now embrace the mantra of self-reliance now on. So this excessive reliance on the supervisor to handhold must go. Okay. And in our last 6 months circulars, we have only do your own stress testing to have your own capital thing. Don't look for RBI to tell that. So this is the time they should have all these early warning system for themselves, stress testing in bank specific manner, and make their own capital planning. Once they feel, suppose they will be 50,000 crores short, it is their duty to go to the market and do it. Yes, the regulator needs only capital, as Tamalda told. How you do it is the ingenuity of the bankers to do. Government will support, but this tendency, a moral hazard issue, let us allow the institution go to the negative, and government RBI are anyway there and to take care. These tendencies. Thank you.
Thank you, Dr. Mishra. So from external regulation to self-regulation, from dependency on the government to inject capital to your ability to raise capital yourself.
Yes, sir.
Thank you very much. Mr. Mawli, how can the government leverage upon the emerging technologies like analytics and artificial intelligence and machine learning to navigate through in this VUCA world? What's your prescription?
No, thank you. I think, it's a great question. I mean, see, I think there's definitely a shortage of skill today. If you look at the India, landscape, huge shortage of talent and knowledge about, these emerging technologies. So I think the starting point would be definitely broad-based exposure and education to emerging trends. Now, second thing is that these trends themselves are very, change very fast. I'll give you an example. I was in a presentation with, a startup in the IIT Madras, research part. This was a year back. They actually presented to me, how they'd analyze an X-ray based on an algorithm that was released the previous week in one of the Stanford, research labs. That is how quickly companies today are adapting, and this is a skill. And so we need to make sure that we are aware of what is going on and do it. Second thing, like what Mr. Kotak said, right? The usage of good technology analytics has amazing benefits in terms of the impact that can create to companies, and we need to realize that. I'll give you a simple example. Just by automating customer service, an organization like PayPal, which is pretty large, can save like $25 million, right? And so I should know, why are you going to call me before even you call me, right? And then when you call me, I should know, hey, you're calling me for this reason. I've confirmed my prediction, and then I'm going to direct you to a solution that makes it very easy for you as well to solve, right? This kind of opportunities are just immense. We have not touched time on risk management that, Dr. Mishra also mentioned. Risk management is a huge opportunity. Today, some of the best hackers, some of the best, people who are out to take your money use these technologies. So if you are not empowered by these technologies, you just cannot battle this, right? We're all online today. Cybercrime, cyber threat is a huge threat. Who's talking about it? Who's going to go and solve these kind of problems, right? And so this requires investment in people, investment in latest technologies, continuing to be aware of what other people are doing. So it's like a machine versus machine battle, and you have a ringside view to go and tackle it, right? That's what I would say in terms of this AI, ML, blockchain. amazing amount of technology that we need to kind of prepare ourselves to, learn and deal with it.
Thank you, Molly. And we have discussed the financial resilience at the economy level. We have discussed financial resilience at the corporate level. What about the financial resilience at the individual level? I think each of us we are worried as to what will happen to my finances in the situation that we are facing today. So I have a couple of questions for Vidhu and Nitin. Vidhu, you representing CFA Institute, you are interacting with a large number of investment professionals. When I look at the markets, the stock market in particular, they are back to the same levels as they were pre-COVID time. We are almost touching 39,000, 40,000 Sensex, which was the same level what we saw in January of the year. Now, is it an indicator of resilience, or is it purely liquidity driven? What is your advice to a small investor like me who's planning to go to the equity market to invest his hard-earned money? What's the sense you're getting from the investment community? Unmute yourself, Vidhu, please. Vidhu, unmute,
Thank you.
please.
Sorry.
Please.
So my advice to you would be to not take advice from me to start with. Having said that, this is a question that we have been asking ourselves, because our members work as portfolio managers, as wealth advisors, as analysts, and so their job is to look at what's happening on one side in the markets, and then what does it mean for their customers. And so one of the things that we've been saying is that we are seeing in India the kind of changes that the clients of wealth management industry saw post the global financial crisis. Low interest rates, low expectations for economic growth. We have for a very long time been in an economy where everybody thought that the economy will keep growing quite fast, and the investment opportunities are there, and the returns would be there, and so on. That is very quickly changing. So there's a lot to learn from what happened in post GFC in the developed markets. Similar things are going to happen to us in the current markets, and that is going to, so our wealth advisors, for instance, are changing very substantively the kind of conversations that they are having with their clients in terms of asset allocation, the way you look at risk, and so on. So to come to your question about what is driving the markets, clearly the size of central bank balance sheets is a big factor, and the liquidity that is driving it. You see the same thing in the West. I'm sure you've heard stories of the Nasdaq whale and so on. We also see that there is concentration. That is the markets are being driven. It's not a broad market recovery, but but it's concentrated on some sectors, some stocks, and so it has implications for what kind of investment. Are you doing active investment? Are you doing passive investment? We have to see whether the push for passive is going to happen in India in the same way that it has happened in the West. So a lot of things are changing, and so if you're a wealth advisor, then you need to rethink your trade. You need to rethink how you are advising your customers. And there is a real need for people to get good professional advice, because these are not times when you can figure things out for yourself. And that good advice again is really lacking. And there is room for talent. In fact, this is a good time for students to get into this business, because I keep telling them that you are the disruptors, and you can think fresh. I don't know if I'm answering the question that you have asked. But
Thank you. Nitin, your take on financial resilience for individuals. What is that? Why it is important, and how to create that resilience?
I think you've touched a very important point, and I think resilience of all sorts, and financial resilience in particular, can be a big savior in this pandemic. As I said in the beginning, resilience is a mindset. It's emotional strength. So what is important is for people at this time to have faith and confidence in oneself to start with. That is the beginning of the resilience. However, I mean, just to talk about that, what I have seen here is, I've seen the plastic economy in the West. The philosophy of enjoy now, pay later, or living from paycheck to paycheck without any thought of maintaining a personal liquidity, building any reserves, or creating a strong personal balance sheet has led many lives to ruin with credit card debt and huge borrowings. Contrary to that, I am sort of familiar with the Indian values of things like cut your coat according to your cloth, or not following the thing like amdani atthani kharcha rupaya. And the emphasis that Indian culture gives on individual savings, that I think has helped sustain many people longer. So fiscal resilience for individuals is very important. And the same set of rules, maintaining alternative resources of cash flow, building reserves, diversifying investments, effectively managing your debt profile, acquiring appreciating assets, all these principles that help strengthen financial resiliency for corporates are equally applicable to individuals. So I think it's very important, and we need to follow the same principles as we follow for our corporates. In our own lives, we need to follow these.
Thank you, Nitin, on a very positive note. I'm coming to Ms. Richa Gupta. Richa, we have heard a lot of positives, a lot of negatives, and it was mentioned very clearly that a crisis and opportunity are the two sides of the same coin. So I would like to ask you, how can this crisis be turned into an opportunity? And what should be the focus of policymakers and businesses to improve financial resilience? Richa, please.
Yes. See, a lot of it, our panelists have already discussed that there is indeed an opportunity in the crisis, and corporates are going out and looking for those opportunities. So I think the priorities are similar to what they were in the pre-COVID times, but the sense of urgency has increased. So there was always the talk for need for digitalization, talk for bringing together the brick and mortar along with the digital economy, looking for consolidation. But suddenly it has become like there's corporates have realized there's no other option. So they are going out looking for opportunities. Even if you will see small mom and pop stores now creating their websites and trying to reach out to people for home delivery solutions, etc. So the priorities remain the same, but now the sense of war footing in order to convert those opportunities have come about. That same sense of urgency, I think, needs to come in with the policymakers, because the priorities for them also remain the same. The structural reforms required to make one India, one market, which still hasn't happened. There are a lot of structural logjams which prevent intrastate movement. For example, the last mile connectivity is missing in most sectors. So the urgency with which the structural reforms need to be envisaged and implemented on the ground, I think there is a need to move to the war footing there. And that by itself, if this crisis can make us do that as country, as individuals, as corporates, we would have converted this crisis into an opportunity.
Okay. Thank you.
Take on this.
Yeah, thank you, Richa. Before I hand over the discussion to the organizers for Q&A session, they have been kind enough to give me 5 more minutes. So any of you would like to put any last comment on questions which were not addressed to you but to anyone else, any counter view to the view expressed by any of the panelists? We can take this opportunity of next 4-5 minutes to do that.
So this is Mauli. Can I jump in here? Two things I want to share. One is, I think, how organizations in India have actually handled the crisis, large organizations, I say, something that we should be extremely proud of. In terms of, how employees have been very resilient. We don't talk about it much, but I think it's amazing where everyone is working from home and managing home and still, delivering amazing value to companies is something extremely proud of. It's a point that I wanted to make. Second one, given that we have a lot of students, right? I think actually, even though some students might feel that, they're a little bit of a disadvantage, given that they're going through the crisis, I think it's a huge advantage because they're actually going through crisis when they're in school and we're all talking about it. So they're going to have a lot of learnings that they can actually lean on as they get into the corporate world. or become entrepreneurs. In a sense, they understand, hey, okay, there's a VUCA world there. I'm actually seeing it. I'm in school now. How do, winners like Mr. Vidhu was sharing, how do they react, right? How is the social sector reacting? How are banks reacting to this? How are large institutions, corporates reacting to it? They have like a 360-degree view that they can actually lean on. And then as they build their careers, like, okay, hey, if I'm not in the office, how can I be successful? What does actually leadership mean? Right? What do successful companies from a strategic perspective, how are they reacting? How did they react to this disruption itself? A lot of interesting learning. So I feel like actually students are in an amazing place to use this as a great case study to lean on, and as they build their careers. I think it's going to be a huge win for them.
Thank you, Molly. We have time for one more comment. Any of you, any would like to take
I
that?
just want to re-emphasize what Mauli said. I think he brought up two very good points. He spoke about the second at length. Let me just briefly touch on the first. I think it is commendable the way Indian, the mass people have responded, working from home and working and managing home and things. But from the social point of view, I think also this was an opportunity where I saw a lot of employers look after their employees like family. So even though the employers themselves were going through troubled times, their markets were impacted, their sales and revenue and cash inflow was impacted. They tried continuing the employment and salaries for people as much as they could. By far, most people did that. I've heard a lot of stories of people coming together, helping each other, even those who had no connection with it. So I think that is commendable. And like you said, we should add on a positive note. I think it's credit to the probably cultural strength of the country, the backbone of philosophy, the Vasudhaiva Kutumbakam philosophy, that has probably come out in these times of stress. And without knowing, I mean, that was probably subsistent in people. And at the time of this stress, that deep-rooted understanding of the fact that we are all in it together has come off to a large extent. Yes, there are obviously some people who didn't do it, and there are other stories. But by and large, I think that is commendable, and a pat on the back for all the people who've done that.
Thank you. Thank you very much. We have one more
Can
minute.
I have one more point here?
Yeah, very quick.
So one more quick advice to academic institutions. So we have to build up potential technicians for financial sector. These transformation cannot happen with the same set of people we are having. We have 5 years hence. So this should be the part of the curriculum now, how to manage a crisis, how to spend stress. All these were not there. We are only teaching how to create a bank and run it. We don't know how to see that it remains healthy and it doesn't die. And if it dies, how to revive it back. So this should be
this can be a case study.
And IMI can take the lead in that, creating in the syllabus. Thank you very much.
Thank you very much. I think it's time for us to hand it over to the organizers for a Q&A session. Thank you very much for a very, very lively discussion. I'll close by a quote from Charles Darwin. It said that it is not the strongest of the species that survives, nor the most intelligent. It is the one that is most adaptable to change. And I think our ability to anticipate, ability to adapt, and the agility with what we can adapt, I think that is what will help us in converting the crisis to an opportunity. So with that, I'll hand over to Shreya. We are going to have a Q&A session for about 15 minutes, and,
Yes,
and then we'll close. Yeah, over to you, Shreya.
thank you so much, sir. Thank you for this lovely session. I'll request the MCs to take the names of people who wish to ask questions.
So after such an insightful session, there are certain questions that student needs to ask. So I would request Ananya Agarwal to ask her question.
Good morning. My question is to Richa ma'am. Ma'am, in your opinion, what is the worst case scenario and the best case scenario for Indian economy in this pandemic?
So Ananya, there are a lot of theories where there's going to be a V-shaped or a U-shaped recovery. The worst case scenario is where we are projecting a W shaped, which means that there will be a return of the pandemic before it sort of finally gets controlled. And we may be looking at extended lockdowns if that happens. And so therefore, the sustainable recovery will only come in 2023. That's the worst case. The best case is we will start seeing recovery from next year onwards and move to at least pre-COVID levels by 2022. But these are all projections as on date. Things are changing very quickly. This can also change very soon. Thank you.
So, Nikhil Bansal, can you ask your question?
Yes, thank you. Good afternoon, panelists. I have a doubt for Molly, sir. Talking about the move from traditional method to digital payments, what is the need to make digital payment system valuable and attractive for poor households?
Yeah, it's a great question. I think, one of the biggest advantages of digitalization is inclusion. So from a poor household's perspective, right, I think what we need to do is we need to make sure that the technology adapts to customer needs. Doesn't matter whether it is poor, rich, developing, doesn't matter. In a sense, okay, what do customers have today that they can transact with? Okay, I have a feature phone, I don't have a smartphone. Okay, so can I make my product work for a feature phone? Like you take UPI, right? UPI today can work on a feature phone as well. Yes, you have to do some star and some numbers and things like that, but yes, it does work. Now, how can I make sure that the merchant also, puts in some technologies that makes it easier for the merchant also to accept, payments, right? That's how we need to think. So, just segment our customers into different buckets and say, okay, what does each of this, population need? And that's how we need to think from a digitalization perspective. Of course, many of these solutions, will not happen, overnight. I'll give you an example of how innovative today the RBI and the government are, right? So today, at the beginning of the pandemic, there is actually a pilot that the RBI is running on offline payments. So this is something that we should be proud of. So we are definitely, yes, it'll be nice if we do this proactively as well, but clearly in India, we are ahead of the game in terms of how, government RBI partnership is in terms of pushing the payments, piece, and offline payments is a great example of how we can make it available to everyone.
Rishabh Avasti, can you please ask your question?
Yes, good afternoon. My question is for Mr. Vidhushekar. So, sir, I have a specific question. So, have there been any changes in originate to distribute model, or will you predict, like, will there be any changes specifically regarding the tranches because of the COVID pandemic that is going on?
I don't see a major connection between the way that it is being done right now. Why do you ask? I mean, where is this question coming from? Why do you think there should be a connection?
Right, so because people are becoming a bit risk averse, they're trying to save their money for mostly consumption. So the pools for originate to distribute model will be affected that way for further transformed into tranches, and the risk factor has also changed a lot in the market in the last 5 to 6 months. So it would be affecting the originate to distribute model.
The market will evolve. I don't see a specific connection between what's going on with the COVID shock and how the market operates. So I really don't think that that whatever evolution happens in the way the market works will happen for other reasons.
Thank you, sir. So I will request Abhishek Datta to ask his question.
Hello. My question is, can India sustain the UBI implemented in India in financial terms, and it can be implemented in India?
Abhishek.
Hello. Hello. Are you able to hear me?
Yeah.
Hello. My question is, can India sustain the universal basic income if implemented in financial terms? And is it possible to implement it in India?
Whom are you addressing this question to, Abhishek?
Hello.
Uh, Abhishek, to whom are you addressing this question, please?
To the whole planet. The whole planet. Hello. Hello.
Yeah.
Dr. Mishra, would you like to take it? Dr. Mishra, you need to unmute if you are trying to answer. Yeah.
First, I'm not able to getting the link. Why he suddenly thinks that is a different area. Universal basic income could be a solution to attaining future resilience so far as prosperity is concerned. Whether we will succeed or not and all, and these are most debatable question. I don't know what exactly, why he feels we will not be able to do in India. It is possible, and an attempt was made towards that. We have already changed the data systems and everything, GDP, GVI, all these, and we are moving towards that. Now there is a problem now, but it will be there. Uh, there should not, but it is evolution, the process of data management, it will be there. But I link to his question is, it will be a better way to do post-COVID as a reform for inclusiveness. So to know how exactly poverty and deprivation are reflected. Because now that also itself is not clear how many people are like that. So to that extent, I only can link. But I am not getting his exact thing. If it satisfies him.
Okay. Okay.
Thank you, sir. So now I will request Himanshi Mathur to ask her question. Himanshi, please.
Good afternoon, panelists. My question is for Nitin sir. How can improvements in agriculture help affect finance resilience?
Can you repeat the question? You're saying how can improvement in
How
agricultural
can
sector?
yes sir? How can improvements in agriculture sector affect finance resilience?
Financial resilience.
Oh, sure, sure. Yeah, there is a lot of possibility. I mean, I can just tell you, I'm working with a non-profit organization called Jivika in Calcutta, and they have designed and they are taking that model to the villages that they are working in Calcutta, where they found two things. How can they reduce the input of seed required per hectare or per acre of land for cultivation? And how can they follow better farming practices which results in a higher yield? So they are doing a double whammy. So they are saying in reducing the seed required to plant to by 10% to 10% from 100 to 10. So it's a significant 10 times reduction in seed required. And on the other hand, they have been able to generate an extra bounty from the earth by getting more. So improvement in technologies like this can improve resilience. There's the other improved technology which is very common is how to use less water through drip irrigation rather than flooding the places, especially in places where water is and in today's world water is a conserved resources. So there are a lot of improved farming practices which can be followed from the point of view of reducing less resources, and on the other hand, from the point of view of getting great output from the ground. And all of these will go towards improving resiliency. The importance is there has to be sustained practice, and people have to do work with this in collaboration with the government so that this model can be replicated to larger areas. I hope I have been able to address your question.
Thank you. Thank you, sir. Now for the last question of this session, I will request Anirudh Gupta to ask his question. Anirudh, please.
Thank you, panelists. Thank you for such an insightful session. So my question is for Tamal Bhattopadhyay, sir. Sir, you have mentioned some uh, initiatives by government of India, and to adding to it, there are some most like Startup India and Prime Minister Employee Guarantee Program as well, and they have played a significant role in MSMEs and its growth. So, could you please suggest some more suggestions for us, or for some more suggestions like how we can leverage this for the recovery of India in these uncertain times?
It's a very broad question. The government is doing whatever it could. I think it's conservative because we have not even crossed half of the year. So they need to keep an eye on the fiscal deficit. So there are, already the government borrowing program which has been raised to 12 trillion. 7 trillion is in the first half and 5 trillion in the second half. And that's only the center's borrowing. If you add to the state government borrowing, it will be even more. So there are two things happening. No? One, on the one hand, you need to push and give money to people to create demand. On the other hand, the existing revenue base, the GST and other tax income, etc., are going down. So it's not exactly fair that we blame the government that no, you are not doing anything. Nothing like that. I mean, its government has been doing, but pretty conservative. It has not put all the cards on the table. I think it is keeping a very close eye on what's happening, and it's being aptly complemented by Reserve Bank of India. Reserve Bank of India has done a series of taken a series of steps. It has flooded the system with liquidity. In India's policy rate now is a historic low. Repo rate, which is the formal policy rate, is 4%. But when the liquidity is too much, reverse repo actually de facto becomes the policy rate, which is 3.35, which is a historic low. So all these things have happened. But I mean, things will the bigger, unlike any other, if it's a financial crisis like 2008 financial crisis, or say 2013 when we had the crisis of rupee depreciating very fast and current account going up. So there are textbook theories for economists and bankers and finance professionals how you can tackle. But here it's the unknown. We really do not know. So all of us are praying when the vaccine comes. Will the vaccines come, or is it all actual marketing gimmicks? Because many people say the way the virus has been continuously mutating, it's very difficult to, one size fits all kind of vaccine. So the key to what's happening in the rest of the world and even in India to get back faster to the growth path is the key to the solution of this COVID problem. Because I mean, we are becoming increasingly getting immune. So which is why you are saying that the number of death is far less in India than other parts of the world, but number of cases have been going up and up and up. We do not know whether we are getting the peak, whether there will be second wave, so on and so forth. So unless the solution, it's a health problem, it's not an economic problem. As far as the economic issues are concerned, government has taken many steps. Reserve Bank of India is pretty proactive. We need to give it a time. But the biggest elephant in the room is COVID, and nobody knows where does it end. So if you ask me to give some solution, I am not qualified, and I don't really trust those who are giving solution at this point of time. I don't think anybody knows where is the end. And as Mr. Mishra, Dr. Mishra was saying, VUL, so on and so forth, nothing. Theoretically, yes, we need to have the greater connectivity and those marketing of rural India, because all of us suddenly are talking about the rural India will be the key to to bring back the growth. But even to make that happen, there are a lot of things need to be done. But as I said, the biggest problem is, which no economist and no finance professional can tackle, is the medical issue COVID, which other parts also struggling. Some of the countries have done better. Probably we could have done better. We started well, but we have been faltering. That's the unfortunate part.
Thank you, sir. Thank you for sharing your insight.
Thank you, sir. Thank you, the panelists, for answering all the queries. I think all the doubts of the students are cleared.
Now I'd like to thank you all the panelists and the moderator for such an insightful session. This was an amazing panel discussion held by our eminent speakers. Starting from the new normal and impact of the volatility, we move towards understanding how this crisis can be converted into an opportunity. As mentioned by Vidhu sir, with opportunity comes the possibility of disruption so as to leave the competitors behind. Also, capital in the markets is a need of the hour, and social capital and health infrastructure should be a central point in future to avoid similar crises. We agree with the reality that this is not the first and the last pandemic. It thus becomes prominent to build social capital and health infrastructure. This will help towards reviving the consumer sentiments. But as mentioned, every disruptions come with an opportunity to gain competitive advantage. This is a time to start making new beginnings. Now we'd like to invite our club mentor, Dr. Deepak Tandon, to give the vote of thanks.
Yeah, thank you, Sarthak. Thank you, Shreya. Thank you, all the Finance Club students. At the outset, I thank cordially Dr. Dhameja for being a very good moderator. And when we conceived this idea about, I'll just take only 3 minutes. We are already, so I have been told by Shreya to finish with by 1. So, and that too sharp. So when we come to the, and I have been into the part of all the deliberations, I've been jotting down all the points. And when we talk about the topic of financial resilience in the continuous disruptions, we have an array of diversified panelists. And thank you, Ravi sir. Ravi sir has already told us very good openings about the stress test, the systematically economic wealth, the viability report, financial viability report, and some horizons about the monetary policy the Reserve Bank of India is going to put forth, and how do we overcome the pandemic into 2021. Thank you, Ravi sir, for sparing your time. Tamal Bandhavate sir, thank you for enlightening us all about the macroeconomic concerns about the safety of the banking industry, as well as how to raise the capital, what about the demand loans, the health of the financial sectors and the financial stimulus. You have rightly said about the U-shaped economy, which is going to come up. Thank you, sir, for sparing your time. Richa Gupta, ma'am, thank you for enlightening us about the domestic consumption, pandemic, social capital, quality of the stimulus which is required. And again, I would like to thank Sanjay sir to take an offshoot from the economics to the corporate reactions. Thank you, Vidhu Shekhar sir, for enlightening us about the cash flow, disappearing customer, supply chain disruptions which are happening and the changes which you have already said. Molly sir, thank you sir for again enlightening us for the digital payment industry, sustainability, the digital trends which are going to happen and how the technology is going to be an enabler as well as a transformation. Nitin Kotak sir, thank you for sparing your precious time and giving us all the nitty-gritties of a non-profit center. You have already given us about very thoughtful provocations about the size, huge size fragmentation, corporate governance, professionalism, and that too from the individual level. And Richa ma'am, thank you again for giving us horizons about the crisis versus the opportunity in the light of the moderator saying what the immunity should be there. And we started from the macroeconomic to the domestic consumption to the corporate to the individual, the cost per beneficiary, rightly said by all the panelists. So on behalf of IMI fraternity, I thank our Director General, Dr. Himadri Das, who is a part of our finance faculty members only, Dr. Dhameja, Dr. R.K. Arora, and all the peer faculty members to take out their precious time and attend all the deliberations. I also thank all the students of the first year and the second year to be part and parcel of this valuable deliberations. I also thank all the IT help 24/7 being to the students and to us. And it's an excellent coverage we have done. And thank you, sir, for encouraging all our students and inspiring us to a new horizons of the AAS, that is adaptability, agility and sustainability, survival of the growth, and last but not the least, Sanjay sir has rightly quoted about Charles Darwin. the theory of the survival, be strong enough, and we'll be out of this pandemic. And definitely, Finance Club is going to have more face to face. And I would like to also put forth that the students have really worked very, very hard for this, and we have been able to convert a lot of sponsorship also for this Conventus. So PNB has become a loan partner, Rabi sir, for this our Conventus also. I thank you also for being an independent director there. And thank you all. And with this, we come to the end. Shreya, over to Shreya. Shreya.
Yes, sir.
Thank you, sir. We are always grateful for your continuous guidance and support. All the good things come to an end, but the journey of learning continues. Ladies and gentlemen, with this we conclude the Finance Summit. We are certain that this session has been very enlightening for each one of us present here. I would like to take this opportunity to commend all the guests, participants, speakers, professors, students, and the staff of IMI for making this session an unparalleled success, as well as the media person for the online coverage of the whole event.
I now request all the panelists, you will be receiving a pop-up for a breakout room just about in 1 or 2 minutes. Could you please join that room?
Yes.
Could you just be...
Lastly, a special thanks to our sponsors, RPSG as Associates Partner, MBA Trek as Career and Skill Development Partner, IOCL as Co-Sponsor, DUBeat, an independent student newspaper as Digital Media Partner, Health and Happiness Private Limited as E-Commerce Partner, Cengage as a Education Partner, Dawanka as Fashion Partner, Brew House as IC Partner, Multi-Mind Creations as Innovation Partner, Punjab National Bank Limited as Known Partner, DU Express as Media Partner, Human Capital as Media Partner, Mint as New Subscription Partner, Radio City as Radio Partner, College Dunia as Social Media Partner, Unity as Student Community Partner, Innovators Bay Technologies Private Limited as Technology Partner, Campus Times Pune as Youth Partner, FinLadder, Tribe Concept, Umbrella Genix, Dr. Vedyas, Cumbia Sportswear, Superior Wire Company, Unschool, Edupeer, Your Space, Sage Publishing, SG. Thank you all.